Hey guys, what's going on? It's Brennan here. Welcome to the channel. Today we're going to be talking about Nintendo stock and why I think it's one of the most misunderstood companies in the stock market today. Let's take a look at current stock price, roughly 25% down from all-time highs, and this could provide an opportunity for us to either start a position or build a position. So first and foremost, what is Nintendo? Well, Nintendo is a Japanese 130-year-old gaming company. It's got a long history, but most notably, Nintendo is the creator of many popular video game characters such as Mario, the whole Super Mario Bros. Series with Mario, Luigi, Yoshi, Bowser, all these characters, Legend of Zelda, which is a popular franchise, and Nintendo even has a stake in the Pokemon company, so anything to do with Pokemon flows through Nintendo. And basically what Nintendo does is that they are not only a video game publisher in which they make their own video games, but they also are a console maker in which they make their own video game consoles. And as a consumer myself of Nintendo, I've had the privilege of playing many of their consoles, from the Game Boy Advance to the Nintendo DS to the Wii, and now the Nintendo Switch, which is their most recent product. I actually have a Nintendo Switch right here. This was one of my Christmas gifts, and I've definitely been loving it. I've been playing Breath of the Wild, and it's a high quality system, and Breath of the Wild, which is an installment in the Legend of Zelda franchise, is definitely a high quality game. So the way that Nintendo kind of differentiates itself from other consoles, and it's important to note that differentiation isn't a form of competitive advantage for companies. Just because you're different doesn't necessarily mean you have a competitive advantage. But the way that Nintendo is different from its competitors, such as Sony with the PlayStation or Microsoft with the Xbox Series, is that it really stresses fun and interactive games. There's no blood, there's no shooting with Nintendo's games. It's just games like Mario Kart where you're with your friends and you're having fun, and it's very interactive. Nintendo kind of carves out its own niche in the market, per se. One form of competitive advantage that I've kind of seen with Nintendo is its product leadership. When you look at the consoles, Nintendo has 4 of the top 7 best-selling consoles of all time. Now that's pretty impressive, but what's even more impressive is its video game success. Nintendo's video games are known for their quality. Okay, there's a lot of quality control going on with Nintendo's games, and any game with the Nintendo seal is really, it symbolizes a seal of quality. Nintendo has no problem with delaying a release of one of its games. A lot of games get released and there's bugs, there's things wrong with the game, there has to be many patches. Nintendo's games come out relatively flawless. And when we look at this diagram right here, 6 out of the top 10 best-selling games are Nintendo. 11 out of the top 20 are Nintendo. That shows how dominant Nintendo is in making video games. So the biggest competitive advantage that I think Nintendo has is its brand. Really, the brand value, the intellectual property portfolio that it has, it's invaluable compared to any other gaming company. If you ask your mom, do you know Kratos from God of War? They'll scratch their head and be like, huh? You can ask them, do they know Master Chief from the Halo series? They'll scratch their head and be like, no. Okay, these are popular games. God of War, Halo, those are popular games for gamers in general. I've played many games, and I've been a gamer for most of my life, but none of them are household names. But when you ask, do you know Mario or Pikachu, these are household names. And that's how I think about it, is Nintendo has a lot of brand value. So what type of advantage does this give Nintendo? Well, Nintendo doesn't have to spend as much on marketing its products. People already know about Mario. People already know about Pokemon. You don't have to spend excessive money to market its games or its upcoming consoles, all that stuff. And you can see this compared to competitors on Nintendo's income statements. This is a huge advantage. So on the screen right now is just a big picture of all of the characters that really fall under Nintendo's umbrella. It's intellectual property portfolio, and it's vast. There's characters from all over, and Nintendo really specializes in telling stories, creating characters that matter. The diagram on the screen right now shows the top 50 highest grossing video game franchises, and as you can see, at number 1 is the Pokemon Company. And number 2 is Mario. I mean, this really shows the power of Nintendo's brand and its IP portfolio. So now let's talk about the management of Nintendo. Who is leading the ship? Well, the president and the representative director is this man right here, Shuntaro. I like the management for multiple reasons. The first is that they're long-term oriented. They're always thinking about the long term. And as a long-term investor, that's something that piques my interest. They're not trying to over monetize their intellectual property like other gaming companies do. Electronic Arts, which is another gaming company, really just monetizes the crap out of its games. They're called pay to win, where in order to win the video game, you have to pay lots of money. And that's not necessarily good for the longevity of, the intellectual property. I also like that the executive management really receives compensation based on performance, kind of aligns the stakeholders' interests. When you look at Activision, for example, the CEO named like one of the most overpaid CEOs, and that's unnecessary and I think kind of ludicrous. Another thing that I like about the management is that they use buybacks opportunistically. Okay, this is a really good thing. If you buy back shares, it lowers the shares outstanding, it boosts the EPS, it helps drive shareholder value. So this is definitely something that I like to see. I like to use this measurement to assess management's use of the retained earnings. So basically a company that makes profit, it may retain those earnings and it may do a bunch of things with those earnings. It could pay them out as dividends, it could retain them and then reinvest. And all this measure is doing is just seeing what type of returns is the company generating on the retained earnings. And as you can see, 66%, that's a massive number. So that definitely shows me that they're using those earnings, for good. There's some negatives to the management that I'm going to talk about, some counter arguments. They're kind of cautious, and this can be a good thing, but it also can be a bad thing. For instance, they're conservative on their estimates. They have low estimates and then blow them out of the park just consistently. They're conservative in their nature in what they do, what areas they expand to. For instance, with mobile gaming, Nintendo's been very conservative in mobile gaming. Mobile gaming has been the fastest growing segment in the video game industry, and Nintendo's really missed most of it. They only have a few mobile games, and they haven't really been that successful. I think the company kind of takes the stance that mobile games kind of acts as a competitor to its portable system. So it really focuses most of its efforts on making games for its portable system as opposed to a competing platform, aka the mobile phone. Another thing that Nintendo's kind of been late to the punch to is just software. Many companies have shifted to more of a software-focused business model in which they charge higher margin digital sales instead of physical sales with the disc and the cartridge. Many companies such as Activision, Ubisoft, Take-Two Interactive have shifted their business models to higher margin digital sales, and Nintendo is really late to this punch. So what the heck is going on with the stock price? Why is it down 25%? Well, the main thing that's driving the stock price is just fear of cyclicality. People fear that Nintendo is a boom and bust business. Historically, Nintendo has been largely dependent on its hardware success. So if you look at this chart, this shows all of the hardware releases by Nintendo and really how cyclical they are. It's a boom and bust business. As soon as they come out, people buy them. After like 5 or 6 years, people get tired of them and they're on to the next piece of hardware. If you look at this blown out picture of the stock price, it really tells a story. During the financial crisis, for instance, Nintendo still performed very well. And the reason for this is because of the success of the Wii. And when you shift to the Wii U, which came out in 2013, it was a failure. It's marketed poorly. It just didn't get received well. And after that, Nintendo went through a dark time. And you can see this cyclicality in the revenue. You can see it in the net income. And it's really just a reminder to Nintendo investors that if this company is dependent on hardware and it has a bad hardware release, this company is going south. And right now we're on the 5th year of the Nintendo Switch. When we look at this product cycle, which I have on the screen, people think we're in the maturity phase. Some people think that we're already in the decline phase. But part of my thesis here is that Nintendo's not as reliant on the hardware as we think. So what else is going on with the price? Well, there's chip shortages that are happening right now, and that's really affecting the supply of Nintendo Switch. However, I think that the demand for Nintendo Switch is still there. And these kind of supply constraints, although they're present in the short term, and they may be present for the medium term as well, over the long term, this shortage will clear up and the demand will flow back in. In relation to cyclicality concerns, I really view Nintendo as 2013 Microsoft. And there's a little write-up right here that I'm going to link to where it kind of details why that's the case. But in 2013, everybody kind of misunderstood Microsoft. They thought Microsoft was on the decline, and they really failed to see how the cloud would just revolutionize the Microsoft's business model. And this was a costly mistake if you look at where Microsoft is today. How is Nintendo's business model being misunderstood? Well, Nintendo is taking a page out of Apple's playbook, and it's really transitioning into a more of a hardware iterative software model. So the idea with Apple is that it has its Apple iPhone, which is its piece of hardware. And every year it comes out with a new iteration of the Apple iPhone. And in combination with that piece of hardware, it has sticky software that makes it hard for you to switch to other pieces of hardware. Additionally, it has just one operating system. So in the past with Nintendo, every time Nintendo released a new console, it would lose all of the users from the past console. It didn't have one operating system, okay? And it would just make a completely different console every time. Now with the Nintendo Switch, which came out in 2017, it's making hardware iterations every 2 years. In 2017, the Nintendo Switch was released. In 2019, the Nintendo Switch Lite was released. And in 2021, the Nintendo Switch OLED was released. And if we look at this investor presentation from 2014 from Nintendo, we can really see how they are, thinking about embracing Apple's business model. So how else is Nintendo's business model changing? Well, it's really digitizing itself. It's shifting more to high margin digital sales. There's kind of a razor blade model going on in which consumers buy games and then they're offered DLC, downloadable content. And basically this is just an extension to the game. You play the game, you finish the game, you want an extension, a little bit more. Well, this is a DLC and it's high margin. And you can see that Nintendo's starting to offer these type of DLC high margin opportunities. This image from Nintendo really shows how they think about their business model is really that they're after value added services. They're trying to establish an installed base of Switches, and then they're offering software value added services. So these services include DLC, which is high margin. They also include recurring revenue in the form of Nintendo Switch Online. Now, this is one of the things that I'm most excited about, and this is why you need to track digital sales. Digital sales includes Nintendo Switch Online, and basically what Nintendo Switch Online is it's just a recurring revenue. It's $20 a year, and recently, last week or so, they came out with news that they're now offering an expansion pack where you can pay $50 a year and get this Mario Kart 48 course expansion pack on addition to your Nintendo Switch Online privileges. And this is huge. This is going to attract more people to pay $50 a year of highly recurring revenue. And Wall Street loves recurring revenue. So now we're really diving a little bit more into the financial side. What I really want you to see here is that hardware units sold declined 21%. Okay, that's a big decline. Obviously, we're going up against tough comparison with COVID. You look at software sales, it's relatively flat, but I really want you to look at what happens to the gross profit. It only declined 4%. So this whole narrative that the Switch sales have peaked and, Nintendo's going for the grave, it really doesn't show here. It shows a business that's less dependent on hardware sales and becoming more dependent on software. So there's also a lot of room for improvement. Currently, 48% of the total revenue is software sales for Nintendo. When you look at competitors, it's 80%. So there's plenty of room for this margin expansion to keep occurring, and that's good news for Nintendo because higher margins equals higher profit, higher multiples, higher valuations. So another thing that Nintendo has going for it is its eShop, which is kind of like Apple's App Store, in which third-party game developers post their games, and Nintendo receives a cut around 30% from their game sales, and this is huge for Nintendo. And there's kind of a network effect going on here where Nintendo offers really good support. At least what I've read is that Nintendo offers really good third-party support. And the fact that they have like an indefinitely lived hardware software model, the operating system, I suppose, that's going to attract third-party developers. And, the fact that the average installed base is also increasing, this is a network effect. To understand what a network effect is, you have to think about Facebook. There's many companies that could make a better social media app than Facebook. The problem is competing with Facebook, you're competing with one of the biggest networks in the world. The competitive advantage there is not from the product necessarily, it's from the network, the size of the network. So as more Nintendo Switches are installed, more users create Nintendo accounts, there's a bigger audience to sell your games to. And this is going to attract more third-party game developers, and there's going to be more content on the eShop. And this network effect is good news for Nintendo. The more third-party game developers that come to Nintendo's system, the more value Nintendo can provide to consumers, and also the more pure profit Nintendo can get from third-party sales. So another thing that Nintendo's doing is it has its own little flywheel effect going on where it has a lot of optionality. It can still go into mobile games if it chooses. That's the fastest growing segment in the video game industry. It's now partnering with Illumination to make its Super Mario Bros. Movie coming this spring. It's also creating its own Super Mario World theme park, and it's creating its own retail space and merchandising and toys and whatnot. And what I like about this effort is that, it's not just mindlessly, jumping into these pursuits that are far away from its core business. It's really letting other companies take on most of the burden, per se, like Illumination with its movie. So all Nintendo's trying to do here is not necessarily make money, but just get people exposed to Mario, Link, Pokemon, what have you. The more exposure that people have with its IP, the more likely they will play Nintendo games. And this will provide a little flywheel effect that fuels Nintendo's core business, which is gaming. So another thing that's going for Nintendo is international expansion. And this expansion really comes from China, where Nintendo has a partnership with Tencent, and it's currently trying to infiltrate China, which has historically been no console gaming world. Lastly, another potential upside for Nintendo, which is a word that we've heard a lot in the past few months, is the Metaverse. So Nintendo has lots of opportunities in the Metaverse because it has such a powerful digital asset portfolio with its brand and the characters that it has and the stories that it has to tell. Imagine catching Pokemon, throwing Pokemon balls at Pokemon in the Metaverse with virtual reality or say. And Nintendo has a few games that really show its potential. Like, for instance, Mario Kart Live, the home circuit, is a game where you set up your own kind of course in your room, in your house, and you have a physical car that drives around the house, and it's played on the screen, and it's an augmented reality game, but this really shows the potential for Nintendo. I mean, imagine if you used the Joy-Cons, which are on the Nintendo. They're kind of detachable controllers, one in each hand, and you use them for like a sword and a shield or a bow and arrow if there was a Legend of Zelda augmented reality game. this would be a huge hit. So there's a lot of potential for Nintendo, and it also comes from one of its hidden assets, Niantic. Now, Niantic, Nintendo has roughly a 20% stake in Niantic, and they recently had a funding of $300 million that put them at a valuation of $9 billion. And Niantic is the creator of Pokemon Go, a hugely successful augmented reality Pokemon game on mobile devices. In the bullish thesis from Crossroads Capital, they really talk about, the potential of Niantic even potentially having a higher market cap than Nintendo today in the future. Nintendo has many hidden assets, including Niantic, but also including the Pokemon Company. The Pokemon Company is a very, very strong business. It actually had a record year with 1.1 billion sales, and the earnings have been growing rapidly. It had a record amount of earnings at $170 million. It's estimated that Nintendo has a 50% stake in the Pokemon Company, and this is really a complicated cross-holding structure in Japan, in which Nintendo has a direct stake of 33% in the Pokemon Company, but also a stake in Creature, which has a stake in Pokemon Company. So it's definitely a complex structure, and this image on the screen helps visualize it a little better. Now, when we turn to the financials, there's a lot of things that I like to see. Uptrending revenue, uptrending net income, a high gross margin of 55%, that's huge. A high net income margin of 25%, also huge. When we turn to the balance sheet, there's $13 billion of cash. That's huge. And a lot of people don't like that. Cash that's just sitting around, the value deteriorates due to inflation, but I see this as a necessary business decision. If cyclicality concerns are legitimate, you'd want to have a big safety net of cash just in case you have a bad console release, one or two, that could weather the storm. So for me, I like that they have the cash on hand, and I like that they have a lot of it. They also have zero long-term debt, which is really good to see. When we turn to the cash flow statement, there's a few things that I also like to see. There's relatively low capital expenditures. This is really good because companies that are heavily dependent on capital expenditures don't weather inflation very well. And the shares outstanding are decreasing, and the company is opportunistically buying back stock, which is good to see. When we turn to the valuation side, what we see here is that, Nintendo is being valued much differently than its gaming competitors. It's valued roughly at 14 to 15 times PE, and its competitors are valued north of 30. Now, the reason for this may come from the growth rates of competitors or the gross margin. The fact that the gross margin of competitors are much higher than Nintendo may justify a higher multiple. But as we've talked about, Nintendo's margin will expand over time as it shifts to more of a software model. So if Nintendo hypothetically re-rates in the future to 30 times a similar multiple of its competitors, that's an easy double in of itself. Now, with any investment, we have to look at the risks. What is the risks in Nintendo? Well, we have the chip shortage, and that's, it's a risk in the short term, but I think in the long term, it will clear up. Another risk is competition. A lot of competition in gaming. This isn't a necessity. It's entertainment. Content is king, and that's definitely a risk. But I think that Nintendo's brand really sets it apart from competitors and kind of garners itself a long-term position in the gaming industry. Speaking of the gaming industry, that's a rapidly changing industry. And as Warren Buffett says, change is the enemy to an investor. So this is definitely a risk as well, is that the industry will change not in favor of Nintendo. But again, I think that Nintendo has carved out a strong position in the gaming industry with its intellectual property, and relatively it's been riding the changes in the gaming industry for quite some time now, and is a juggernaut in the space. A few more risks is, a slowdown in the gaming industry. Obviously, we're going up against tough comparisons for the COVID year, but I think that gaming is a secular trend, and that more people are just going to keep playing games. It's going to become more normalized over the years. You can already see that the gender split is about even. Additionally, the management could make missteps. This is a company that really needs strong management, and without strong management, it could go down the wrong avenues and lead Nintendo astray. And finally, I could be completely wrong, and there could just be a cyclical explosion. Nintendo sales could slump, and Nintendo's business could just suffer. But as I talked about previously in the video, I think this is unlikely because Nintendo is really transitioning into a business that is more software reliant than hardware. So in conclusion, Nintendo has a globally recognizable brand that allows it to spend less on marketing, and that really lowers the consumer acquisition costs for Nintendo. Nintendo's also transitioning into more of a digital toll booth business, a gatekeeper of sorts, where if you want to play Nintendo's experiences, with Nintendo's intellectual property, characters, stories, you have to do it on the Nintendo Switch. Everything Mario, Pokemon related is you have to go through Nintendo. Nintendo's transitioning its business model more into an iterative hardware-software model that's less dependent on hardware and more dependent on digital sales. And these digital sales include highly recurring revenues such as Nintendo Switch Online and high margin revenues such as downloadable content. Finally, Nintendo has a flywheel effect that's like Disney, in which it's moving more into movies, theme parks, retail stores, merchandising, and tools. And this is just increasing consumer exposure to Nintendo's IP, brand, everything, and it's really just funneling consumers to its gaming business. So that's the video, guys. I hope you enjoyed. Make sure to leave a comment on what you think about Nintendo, and leave a like and subscribe, and make sure to catch the next one.